In my around 7 or so years dividend growth investing, I can safely tell you with all honesty, I've made some really good choices investing and I've also made some very bad choices. And don't worry, for full transparency, I'm going to show you a few of each right here in my actual portfolio. So this is one of my dividend growth portfolios, currently valued at around $525,000. Now, a good decision I made a while back was buying 1,000 shares of Apple stock at $118 per share, which just with that one position, I'm up around $71,000 as of the filming of this video. But on the flip side, I also bought 1,000 shares of Verizon stock at an average cost of $54 per share, which I'm currently down around $17,000 on as of right now. Now, in this video, I'm going to explain to you one of the biggest lessons I learned throughout my dividend growth investing journey as of right now. And although it's simple, it might shock a lot of you. So if you're an aspiring dividend growth investor, or maybe you already are building a portfolio, make sure to stick around, drop a like down below, and let's get right into it. So one of the biggest things I see a lot of newer dividend growth investors doing, and this was definitely me, especially in the early days, a lot of dividend focused, income focused investors look for different stocks or ETFs that might be offering a larger than normal dividend yield. Take QYLD, for example, the global NASDAQ 100 covered call ETF. Now, this was an ETF where back in the day it was all the hype, and if you guys have been dividend investing for a while, you know exactly what I'm talking about. And because of how popular QYLD was at one point and even how high of a dividend yield QYLD was offering back in the day, I loaded up on tons of shares of QYLD. In this portfolio alone, I'm sitting at 820 shares. Keep in mind I have more QYLD across other portfolios. Now, although I'm barely down in this position, I'm only down around $400. And if we were to include all the dividends that I've earned over time from QYLD, it's definitely picked up the slack. But a lot of my early investments was picking single name stocks or ETFs that offer a super high yield and honestly just looking at things through sort of a short-term scope. Now, over time, for me personally, I've learned that single stock picking is very, very difficult. And for every good stock you pick, it seems like you also pick another bad one. So over time, what I've done with my portfolio is I've slowly transitioned into purchasing mostly high quality dividend growth ETFs that offer more than just a dividend, but offer growth potential on top of that. And also along with that, effortlessly diversify your portfolio without even thinking too hard about it. Now, honestly, just for the sake of everyone being able to agree, it doesn't even really matter which dividend growth style ETF you want to choose and you want to buy into long term. Now, as you can see in my long-term dividend growth portfolio over the last year or so, I've been buying basically a share or two or three of the Schwab US Dividend Equity ETF on a daily basis, because that's the ETF that matches closest to what I'm looking for my investing strategy. But whether it's SCHD, the S&P 500, VU, VIG, DGRW, DGRO, there's so many high quality dividend growth ETFs out there that all offer multiple different things. Pretty much for the most part, all these ETFs offer a starting dividend yield anywhere from around 1.7% upwards to around 3.7%, depending on which ETF you're talking about. Now, also, all these ETFs offer growth potential, and that's something that a lot of the higher yielding stocks and or ETFs out there might not offer. But maybe most importantly, and this is where it goes back to the title of the video, a lot of investors that just set maybe daily buys and don't even think too hard about it, just buy daily, VU ETF, DGRO, or even SCHD. These investors that do daily buys of super high quality dividend growth ETFs like this are most of the time running laps around investors that are single stock picking and trying their hardest to beat the markets. When the reality is that it's very, very hard to beat the market. The S&P 500 is very, very tough to beat. And I remember personally when I first started dividend investing, I thought to myself that there's no way that I'd want to invest into something so boring like VU, SCHD, DGRO, etc. Because I thought personally that I would be able to outsmart the market. I thought that I'd be able to pick stocks that might do better. But the reality is this. Especially for newer dividend growth investors out there, it's much better off that you build out a nice foundation on your portfolio. Not to mention, the longer that you're invested in some of these names, the more and more dividends you're going to get paid over time, because most of these high quality dividend growth ETFs do also offer massive dividend growth rates. But by building out a foundation in your portfolio right when you start, whether it's buying a share of VU every week or buying a share of SCHD every other day, whatever of course matches your budget or your strategy. By doing that early on, you can build out a nice foundation for your portfolio, and then later on, if you want to sprinkle in some single stock picks to maybe try to outsmart the market or maybe see some sort of opportunity, then by all means, I don't think that's a bad idea at all. But I promise you, I'm friends with investors personally that have been buying one share of VU on a weekly basis for years, or investors that just buy into the S&P 500 and then use a little bit of side cash for trading. Those investors, for the most part, are running laps around the investors that are trying to outsmart the market and trying to mess around with single stock picking, at least at the start. Now, for me currently, I've been investing for around 7 years, like I said earlier, and at this point, I sort of have a decent grasp on the market, and I definitely see opportunities here and there. So by all means, I have no problem with devoting maybe 20% of my overall cash balance on a weekly or monthly basis and use some of that money to mess around with some single stock picking if I feel inclined. But that's not going to change the fact that on a daily basis, at least for me personally, I need to buy a share of SCHD. And I'm not saying that I'm going to do this forever. Maybe I'll switch up an ETF and maybe I'll change over to VOO or DGRO in the future. But for right now, my strategy is simple. Buy at least 1 to 2 shares of SCHD on a daily basis and stack up as many shares as possible to build a massive foundation that is simple, that is brainless. I don't even have to think about it too much. SCHD, for example, is well diversified enough to where the ETF most likely will be doing just fine, unless, of course, something crazy happens. But for the most part, buying SCHD daily at around $70 per share, $72, $68, whatever it's trading at, is allowed me to build a massive foundation that now is going to hopefully propel my portfolio for years to come. So especially for those newer investors out there listening to this video, make sure to come up with a sound strategy and buy into something that's high quality. Make sure that you're going to be happy owning it, whether it's 1, 3, 5, 10 years from now. If of course that's what you're going for, if that's what your strategy says. Because for me as a long-term dividend growth investor, that's definitely the most important part of all. So just to recap, there's a lot of dividend growth investors out there that I know personally, including myself, that are buying high quality dividend growth ETFs on a daily basis and then maybe using a small amount of money, a small amount of cash balance to buy some single names for some higher potential upside. Now for the position that I was talking about that I pretty much buy on a consistent basis, as you can see here, I pretty much buy 1 share of it almost every single day. I'm talking about the SCHD ETF for the Schwab US Dividend Equity ETF. Now this right here is just a filtered screen from all my purchases of SCHD in 2023 so far. And keep in mind, I've been buying SCHD even before then. And on a consistent basis, I pretty much normally just buy, say, 1 share per day on this portfolio. And some days when SCHD might be down a little bit more in price, I might grab even 3 or 4 shares. Now, as we keep scrolling back further and further and further, you can see that over time, over the last year or so, the amount of SCHD shares that I've been able to buy over a long time frame has most likely stacked up to a nice size position, which 100% does happen to be the case. I currently am sitting in just this one portfolio of around 179 shares of SCHD, which is one of my favorite long-term holdings, and currently sitting at around $12,500 worth of it. Now, of course, all of us are going to have a different amount of budget to be working with over said time frame, but regardless, even if you're able to purchase half of a share of SCHD, maybe every day or even every other day, the amount of shares over, let's just say 1 year, can definitely add up to a nice size position. But all I ask from you is one thing. Next time that you're considering buying that speculative single stock, remember there's dumber investors out there that might even have a daily recurring purchase up through their broker that is potentially currently running laps around you. But now I want to hear from you guys down below. If you already currently have a daily purchase that you've been buying for a while, or if you have one that you're planning on doing, drop the ticker in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.